It's time for Q&A with the Credit Game.
Here are 5 reasons why you may not want to apply for a loan when trying to rebuild your credit. Reason number 1, not all loans increase the score. If it doesn't show up on either report, then it won't help increase your score no matter how good your repayment history is. This is the reason why I don't suggest RSP loans, because they generally don't show up. Loans with non-major banks don't always show up on both Equifax and TransUnion and can make you look a bit desperate. You might only have the loan just to rebuild your credit, but an underwriter may assume that it's because you can't make ends meet, and that's why you're willing to pay the high interest rates and fees. Even a GIC savings loan, which is technically a forced savings plan, can still make you look desperate in the eyes of banks and lenders. A payday loan really looks bad. I've seen Canadians get declined just because there is a recent inquiry from a payday loan company. Reason number 2, the high rates and fees. If you already have good credit, you can generally get best rates with minimal fees. However, when trying to rebuild your credit, it's common that loans will have a 30% interest rate in addition to the fees. Many online car websites and dealerships suggest these loans for 10 to 12 months so that you can rebuild your credit and then refinance your bad credit car loan with one with lower rates. This may sound like a good game plan, but short-term loans lower your score more than it helps. Which brings me to the next reason why you may not want to apply for a loan. Paying off or refinancing a loan lowers your score. I know that sounds weird, but in the eyes of the credit bureaus in Canada, the longer a credit account is established, the better it is as an indicator of how well you handle credit. That is why a loan, or any type of credit, doesn't increase your score much until the account has been open for a while. As soon as the loan is paid off, closed, refinanced, or changed at all, it lowers your score. The longer you keep that loan active, the more it will lower your score when it is paid off or closed. I know this doesn't seem like common sense, which is why I have a more detailed video on this in the Show More or More Info section. I don't suggest using loans to rebuild your credit because it only helps your score while you're making the scheduled payments. 4. Loans can limit what you can qualify for next time. You can have amazing credit and a high score and still get declined if the underwriter feels your debt payment responsibility is too high. You can check out the More Info or Show More Info section to learn more about GDS and TDS. Here's an example of how much a vehicle payment can affect what you can get approved on your next mortgage. Ronald was convinced by an online car salesperson that an auto loan would build his credit and even offered him a steal of a deal. However, no one ran the numbers to see how much that $419 a month payment would affect his mortgage application. It ended up lowering his purchase power by around $80,000. I always suggest you consult your mortgage broker before applying for a loan to ensure you aren't creating problems for yourself. There is no sense buying furniture or a new car if you don't qualify for a house to keep it in. Number 5, there is a much better way. There are many companies that will sell you on the idea that getting a loan is a great way to build your credit. Loans aren't bad, they just aren't the best way to improve your score quickly. A credit card or a line of credit will build your credit faster than a loan and is easier to keep active for longer because there is no set end date. You only get charged interest when you keep a balance, and sometimes there's no fee options. When looking to rebuild your credit, I only suggest applying for a loan that will report on both credit bureaus and is with a major bank. It looks better on Equifax and TransUnion and is a heck of a lot less expensive. If you can't get approved with a loan with a major bank, I suggest using credit rebuilding credit cards or other products to jump up your score first and then apply for a loan if you really want to. You can check out the More Info or Show More section to find an in-depth review on each credit rebuilding credit card, line of credit, or loan available in Canada.